Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst, part of MarketSmith India team. The disclaimer for this podcast is that whatever stocks we discuss in this podcast are intended only for educational purpose, should not be taken as an investment advice. It's very important to understand Nifty's price volume action to get an overview of how the market is placed and what are the levels we are going to expect going forward. Hence, it is very important to understand price volume action. If you look at the Nifty's daily chart, I can clearly see in the last 10 trading sessions, the trend is on the downside, except for one trading session, that is this blue candle, where Nifty reclaimed its 200 DMA. Apart from these, all the other candles are red, and Nifty closed in the lower half of uh, trading range, indicating bearishness in the market. Even though in the starting period the volumes were on the lower side, but in the last 3 to 4 trading sessions, volumes have also increased. This is a very bad sign. That is because when the volumes are on the higher side, that indicates institutional activity is happening in the market. And when the price action is also on the downside, that indicates institutions are exiting or selling in the market, which is a very bad sign. Overall, the view is on the bearish side. Nifty trading below its key moving averages is not a good sign. And 200 DMA has been a very strong support historically for the Nifty. You can see here as well, even though it was the 200 DMA was breached briefly for a period of 3 to 4 trading sessions. It was reclaimed, and you can see the rally Nifty had after this. Hopefully, the same thing happens going forward, but in the stock market, hope is not a good thing. We never know what will happen, but if you look at historically, the patterns will try to replicate in the future as well. So that is the reason we are expecting the Nifty to reclaim its 200 DMA and find support at its 200 DMA. If that doesn't happen, definitely we might see further selling happening in the markets. It won't be a surprise if the 17,000 level is also breached, because it's just another 2% from here. So it's not a major selling. So 70,000, 16,000 levels are also expected on the downside. I'm not trying to bring cautious or bearish signals here, but I'm just trying to tell you the possibilities how the Nifty might behave going forward. On the O'Neill front, we are in the downtrend status. That is because recent correction low, that is budget low, was breached, and Nifty is also trading near that level. Uh, Hence, we are in downtrend. However, yesterday's session was considered as day two of attempted rally because this candle's low was not breached. So as long as this candle's low, it was around 17,250 level, if I'm not wrong. If that level is not breached in the today's trading session as well, then we'll be changing the market status to rally attempt after the end of today's trading session. From there, again, we'll be looking for a follow-through day to change the market status to confirmed uptrend. Until then, we'll be staying sidelines and we'll be looking out for stocks which are resilient and which are forming right side of the base patterns and which are looking very good both fundamentally and technically. In this current scenario, it is very important for all the investors to preserve your capital. There are lots of stocks which have come off highs, and it might be very tempting for a retailer to buy those stocks because of value investing psychology. Adani stocks, if you look at, they are down more than 50-60%. Some other stocks in the group have fell nearly 70-80%. So it's a lots of uh, selling happening in the stocks, and most of the retailers who are beginners try to catch those stocks, but you never know what might happen in those companies. It's always important to not to fall into traps, especially value traps. Always look for momentum stocks which are on a positive trajectory. That is the reason we do not encourage those kind of setups in our methodology. Talking about some other news and which will be stocks which will be under radar in the today's trading session are Our TW and BHEL consortium was declared as a second lowest bidder for manufacturing of train sets related to Vande Bharat trains. Uh, Being an L2 bidder, they get around 80 train sets, whereas L1 bidder, that is lowest bidder, will get remaining 120 train sets. Hindustan Petroleum HPCL has raised nearly 1,600 crores of rupees by issuing non-convertible debentures, commonly known as NCDs. These these funds will be utilized for refinancing existing borrowings, or these funds can also be used for capital expenditure, depending on how the board is going to take a decision. MOIL, which is an center-owned, government-owned manganese company. For the month of February, manganese ore production grew 10% year-on-year basis to 1.31 lakh tons, whereas sales in the month of February increased 19% year-on-year basis to 1.32 lakh tons. Happiest Minds board has approved raising nearly 125 crores by issuing NCDs, again on private placement basis. And these funds will be used for general corporate purpose. The company has not given a specific purpose, but they have stated general corporate purpose. So it can be anything related to debt repayment or further capex plans. Yesterday, if you look at institutional activities, it was very good. Both FIS and DIS have bought in the Indian market. However, Indian Nifty closed in the negative territory. FIS have bought very high, huge amounts of Indian equities, nearly more than 12,770 crores, whereas domestic institutional investors have bought more than 2,100 crores of equities. Overnight, US market closed in the positive territory. Dow Jones more than 1% higher, whereas S&P and Nasdaq closed 0.7 to 0.8% higher. Asian markets are trading mixed. You can see Shanghai and Kospi are trading flat with slight negative bias, whereas Nikkei is clearly in the positive territory and the momentum is on the higher side. It is trading more than 1.45% higher. So there are no clear cues on the Asian front, but US front, the cues are very strong on the positive side. SGX Nifty is also indicating a higher opening for the Indian market. Around 120 point higher opening is expected on the Indian market. If the higher opening is sustained and the Nifty doesn't breach a recent correction low, then definitely we'll be changing the market structures to rally attempt. From there, we'll be start adding stocks to buy watch list, and then from buy watch list, if the market sustains well above key moving averages, then we'll be adding stocks to model portfolio as well. We have put a sectoral view as well here to get an overview of how the sectors have performing. We have talked about Nifty performance, and if you look at the sector performance as well in line with Nifty, then you'll get a more clear picture and more comprehensive picture of how the market is behaving in the current moment. If you observe this column, market condition, you can see none of the sectors and broader market indices, mid cap, small cap, or none of them are in rally. That's clearly an indication of a broad-based selling or a profit booking, whatever it might be happening in the markets. And if you look at this column as well, 50 DMA, all the sector indices are trading below 50 DMA except for IT Pharma with Nifty IT index, which is trading just 0.7% higher. It's not a one-day movement can breach 50 DMA as well. So clearly a bearish sign on the sectoral front as well. So overall market is not doing good. The broader market indices, Nifty mid cap is in rally attempt, looking for a follow through day. Nifty small cap is in correction, and both these indices are trading below their 50 DMAs as well as 200 DMAs. So broader markets are also clearly on the downside, and the bearishness is there in the whole market, not just in large cap stocks. It is there in mid cap, small cap, and all the sectors as well. Thanks for joining today's